Hello, and welcome to this video on sole trader income statement and statement of financial position. An example we're going to go through here called Successful Supplies, the trial balance as at the 31st December 2023. Now I've got the account name in the first column, I've got a debit column, and then a credit column. Now in your debit column, you have what are known as assets, items owned by the business, you have expenses, that's the running cost of business, and drawings. They all go in your debit column. In your credit column, we have liabilities, we have income, and we have capital. If it's an asset or liability, that goes in your statement of financial position. Expenses and income go in the income statement, and drawings and capital go in your statement of financial position. So I'm going to go through each account name. You're going to identify if it goes in the statement of financial position or the income statement. So the first one is rent, and that's an expense. So it's going to go in your income statement. Revenue is income, so it's going to go in your income statement. Purchases are an expense, so that goes income statement. Interest paid is an expense, that's income statement. Shop wages are an expense, that's income statement. Commission income is income, so that's income statement. Motor expenses, remember it's got the word expenses, yes, that's an expense, that's your income statement. Now motor vehicle cost, that's an asset, so that goes in your statement of financial position. Likewise, machinery cost, that's an asset as well, so again, that's your statement of financial position. A loan is a liability, so that's statement of financial position. Discount allowed is an expense, so that's income statement. Insurance is an expense, that's income statement. The provision for depreciation and motor vehicle is offset against the cost, so that's in our statement of financial position. Likewise for machinery. And the inventory at the 1st of January 2023 is the opening inventory, that's an expense in our income statement in the cost of sales section. Capital is a liability, so it's your statement of financial position. Bank is an asset, so it's statement of financial position. And drawings are in the statement of financial position as well. And in the last few now, trade payables, and again, it's a liability, statement of financial position. Trade receivables are an asset, so it's statement of financial position. Provision for doubtful debts are offset against your trade receivables, so again, that's in your statement of financial position. Now, in this question, we've got 7 different notes. 1, 2, 3, 4, 5, 6, 7. So, in number 1, we've got provision for doubtful debts is 3% of trade receivables. So the business does not expect to get 3% of its trade receivables based on the year-end value of trade receivables. Wages owing at the end of December 2023 amount to £3,000. So we're going to add it onto the wages, and also we're going to include it as an accrual of expenses. Insurance paid in advance at the end of the year. So we're going to deduct that from the insurance figure. We're going to treat it as prepayment of expenses. Closing inventory at the end of the year. That's going to be shown in both the income statement in the cost of sales section and in the current assets section of the statement of financial position. Commission income owing at the end of the year amounts to £750. We're still due more income, so we're going to add it onto commission income. It's going to treat it as accrual of income, again, in our statement of financial position. Depreciation of motor vehicles. The method is reducing the balance at 15% per year. So the charge for the years in the income statement and the accumulated depreciation is going to be on our statement of financial position. Depreciation of machinery, the method is straight line method at 10% per year. Again, the charge for the year will be in the income statement and the cumulative depreciation will be in a statement of financial position. Right, let's see what we're going to do then. We're going to prepare the income statement for successful supplies for the year ended the 31st December 2023 and prepare the statement of financial position for successful supplies, again, as at the 31st December 2023. Now, the first thing I'm going to do is I'm going to go through all of these 1 to 7 workings now. That's what we're going to work out now. And each one's going to have a number. So, working number 1, provision for doubtful debts. That's your trade receivables times the percentage. We're told in the question that the percentage is 3%. The trade receivables figure, we want to go back to our trial balance. We look for trade receivables. And here they are. So that's £20,000. So the provision for doubtful debts then at the end of the current year is the £20,000 times the 3%. That gives us £600. So that's our provision at the end of the year. So I'm just going to highlight like that. We're going to use that later on. Now, last year's provision we will find in the trial balance. It's our provision for doubtful debts of £450. Now you compare last year's provision with this year's provision, and this year's provision has gone up from last year. So therefore, there's an increase in provision for doubtful debts, and it's gone up by £600 take away £450, which is £150. So that goes in your income statement as an expense. So I'm going to highlight that because we're going to use that later on. Right, wages. So I'm going to start off with the figure in trial balance. So back to the trial balance and look for wages. Here I've got shop wages is £28,000. Now we're told there were wages owing at the end of the year. That was in point number 2, and the amount was £3,000. So I'm going to add that on to the £28,000. That should give us £31,000. Insurance now. Again, go into the figure in your trial balance. Here we go. It's £15,000. In the note, number 3, so it was paid in advance, and the amount amounted to £3,000. So we're going to deduct £3,000 from that. Then the figure on the income statement will be the difference, which is our £12,000. So I'll highlight that, plus the £31,000 for wages. We're going to use them in a moment. Commission income, again, start off with whatever is in the trial balance. So commission income in the trial balance. Here I found it there. It's £5,000. I'm going to add on the amount that was owing at the end of the year, which is in point number 5, £750. So I add those two together, I get £5,750. And again, I'll highlight that because I'm going to use that in a few moments. Motor vehicle depreciation is the cost take away commencing depreciation to date. So the cost we will get in the trial balance and the commencing depreciation to date we'll get in the trial balance as well. So the cost, need to go back to our trial balance. Motor vehicle cost I'm looking for. Motor vehicle cost at £60,000. So I've got my £60,000. And I'm going to take away the cumulative depreciation. And that is the figure, again, in the trial balance for, let's find it, motor vehicle provisional depreciation, £16,650. So £16,650. Now I'm going to times it now by the percentage. So back to the notes. What was the percentage for motor vehicles? It was 15%. Remember, this is your reducing balance method. So now I've got to work out, you've got your 60,000, take away 16,650, that comes to 43,350, and then times that by 15%, and we're going to get, for our answer, 43,350 times 15%, and we get £6,503. I want to check that, there might have been a decimal there. Yeah, so here I've got a decimal, so I'm going to round it to the nearest whole number, and that's going to be £6,503. So again, I'm going to use that, so I'm going to highlight that again. Machinery depreciation is the cost times the percentage straight line method. The cost for machinery, I go back to my trial balance. Machinery cost here is £10,000. The percentage we're told in the notes, it's a straight line method, remember, so cost times percentage is 10%. So I'm going to times that by 10%. And 10,000 times 10% should give us £1,000. Yes. And again, I'm going to use it in a few moments, so I'm going to highlight that now. Now, come to the income statement now. Now, I've preset this out for you to show you that we're not going to have any amounts or any categories where there's going to be no amount to be shown. Now, so I've got revenue. I've got my £3 symbols just in case I'm going to use the 3 columns. I've got revenue. Now, I now want to know if there's going to be any sales returns. If not, I'm not going to include it. So I go back to my trial balance, go right to the top and look the way down. See if it says sales returns anywhere in my trial balance. And it doesn't. So that means I'm going to have no sales returns. So after I go straight to cost of sales. So it's opening inventory plus purchases. Then we might have purchase returns and carriage inwards. So let's see if we've got purchase returns or carriage inwards. So again, looking through the trial balance list, there's no purchase returns and there's no carriage inwards. So I did not write them down. Now also, because there's no purchase returns that carried inwards, I will not be using the first column. So I can basically delete now that pound sign at the top. Gross profit, add income. So I look to see what other income do we have in this question. Now the only other income, again, is this commission income there. So the only other income I have is commission income. So I'm not going to write things like rental income, discount received or anything. I'm just going to put a commission income. Now from expenses, the way I do the expenses, I've got them in an order here. Now the order there is taken straight from the trial balance. So I go to the trial balance, and the first expense is rent paid. So that's my first expense in the expenses section. I then go down my trial balance. Now purchase is my cost of sales, then got interest paid and shop wages. So they're my next two. So interest paid and shop wages. Back to my trial balance. The next expense is motor expenses, and then we've got discount allowance and insurance. So check my little summary down here. So again, I've got motor expenses, discount allowance and insurance. Then next one we have is we know there's going to be depreciation of motor vehicle and machinery, but because there's a provision for doubtful debts and we've got a change in that, I put that before my depreciation. I always put the depreciation at the end. So my provision for doubtful debts is an increase, so that's an expense. So that's after my insurance, and my front is depreciation of motor vehicles and depreciation of machinery. Now all these W's here, they link to my workings out, but that we just done here, numbers 1 to 6. So now I'm going to start filling in the information. So my revenue. My revenue is going to come straight from my trial balance. So I go up to my trial balance, look for revenue. If I remember correctly, it's near the top. Here you go, revenue. So £125,000. Now, opening inventory goes in what would be the middle column. So my opening inventory is the inventory figure in the trial balance. Here you go, inventory at the 1st of January 2023 is £25,000. Purchases, again, that's our figure in our trial balance, £48,000. Now we add the two together now, before we do our closing inventory, and 25,000 plus 48,000 gives me £73,000. Now closing inventory is not in your trial balance, it's the figure in the notes to the accounts. We're going to take that away. So the closing inventory, according to our notes, number 4, is £32,000. So now the £73,000, which is your opening inventory plus purchases, take away your closing inventory, that gives us our cost of sales. So it's the £73,000 less the £32,000 gives us cost of sales of £41,000. Now to get a gross profit, it's your revenue of £125,000, take away your cost of sales of £41,000. So it's also revenue, take away your cost of sales. That gives us a gross profit of £84,000. Now commission income, we did a calculation for that, so I've got W4 next to it. There we go, that's our £5,750 I highlighted. So that's going to be £5,750. Now that's the only other income. So now we add that on to the £84,000, we should get £89,750. Now remember, that total here does not have any name. Now I go to my expenses now, I've got rent paid. So there's nothing in the notes of the accounts about that, so don't worry about that. The ones in the notes of the accounts which need calculations, I've got these W's here, W2, W3, W1, W5 and W6. So all the other expenses will come straight from your trial balance, and they go in what would be the middle column. So your rent paid is the figure in your trial balance for rent paid. That's the first one on the list, so it's £2,000. Next we have interest paid. So again, it's going to be straight from trial balance, there's nothing in the notes about it. And here we have interest paid, £800. Now shop wages, we did a calculation for that, that's W2. So shop wages in working 2, which are highlighted, is the £31,000. Motor expenses, no calculations for that, so it's straight from the trial balance. So motor expenses, here we go, £10,000. Discount allowed, straight from your trial balance. Here we have £5,000. Increase in provisional trial for, it's insurance. Insurance then, got W3 next to it, so that's going to work in number 3. And we've got total there of £12,000. Now the increase in provisional outlets, that was working number 1. So the increase there was the £150. W5 is the depreciation of motor vehicles. So back to W5. That's 6,503. Now remember, we're going to come back to that in a moment. So I'm going to put a little asterisk next to it, a little star, to remind me. Okay. Now, depreciation of machinery again. That's working number 6. That's going to be £1,000. Now again, we're going to use that figure in our statement of financial position in a few moments. So I'm going to put a little star there to remind us. So now we've got all of our expenses now. So we now need to total them up and put them in the what would have been the 3rd column or the ends column. And they come to £68,453. Now our profit for the year will be the £89,750, take away the £68,453. So here we go. It's the £89,750, take away the £68,453. And we got a profit for the year of £21,298. And that profit figure we're going to use eventually towards the end of our statement of financial position. Right, so here we go to statement of financial position. And remember, that's at the end of the year. It's not for the year end, it's a specific date. And our specific date is the last day of the year, which is the 31st December 2023. And we are successful suppliers in this question. Right, your non-current assets now. The only assets we got are the motor vehicles and machinery. So it's these two here in our trial balance. So that's our 2 assets there, the costs. So we'll start with them now. So again, you need to remember these layouts, and you've got the templates for these yourself. The cost of the motor vehicles comes straight from your trial balance, which we have there is £60,000. And for machinery, comes straight from the trial balance, look for the cost again. Here I've got it, £10,000 there. Now this is a bit of confusing something. Accumulated depreciation. Now what that is a depreciation in your trial balance plus this year's depreciation. So in other words, these two that I put little stars next to. So for motor vehicles, the provision in your trial balance was, we go back to the trial balance. Motor vehicle provision for depreciation was £16,650. Then we add on the depreciation in your income statement, which I've got a star next to there, but I'll go directly to the income statement. It's easier to look at. So that's £6,503 there. And that gives us a total of £23,153. Machinery, again, you go to your trial balance. Machinery provision for depreciation is £4,000. Then you add on the machinery depreciation in your income statement, which we worked out as £1,000, you can see it there. But again, you'll see it in the income statement. It's there. Now, to get the net book value of carrying amount, so the net book value and carrying amount, they refer to the same thing. Net book value is the previous terminology, although the examiners are still using that in the exam, and the more up-to-date terminology is carrying amount. Now, to work out your net book value or carrying amount, you take your cost figure and you subtract your accumulated depreciation. So for the motor vehicles, it's your £60,000. Then you deduct the accumulated depreciation of £23,153, and that gives us a carrying amount or net book value of £36,848. Likewise, machinery, the cost is £10,000. You take away the accumulated depreciation of £5,000, and that will give us £5,000 net book value of carrying amount. Now we want the totals of all of these 3 columns. So the cost will total £70,000. Accumulated depreciation totals £28,153, and the net book value of carrying amount will total 41,848. Now, you can check that figure because it should be the cost 70,000, take away the total accumulated depreciation of 28,153, and it does come to 41,848. Now, the cost figure is 70,000 and the cumulative depreciation of 28,153. We've finished with those figures now, so they're going to be underlined. The 41,848 is not underlined because we're going to use it later on in our statement of financial position. Right, now we come to our current assets. So again, this is going with your template that you've learned, and you should have a copy of this anyway. Your inventory there, that's your closed inventory. Now, all these go in our middle column unless we've got provision for doubtful debts. So closed inventory, we know it's in the notes of the accounts, and it's also in our income statement. So it's going to be £32,000. Now, because there's a provision for doubtful debts, my trade receivables and provision for doubtful debts are going to go in the first column here. So trade receivables comes directly again from the trial balance. And here they are, it's £20,000. The provision for doubtful debts, we worked it out in working number 1. So last year's provision was that one, 450. This year's provision is the £600 to 20,000 times 3%. And then the net figure, which will be your £20,000, take away your £600, goes in the middle column, and we get £19,400. Now our bank, to get the bank figure, we go to our statement of, sorry, not the statement, we go to our trial balance. So back to the bank then. So trial balance, looking for the word bank now. I found it here, and it's £15,000. Prepayment of expenses. That's the expenses we paid in advance. Now that's in the notes to the accounts. So if I go back, what we paid in advance was the insurance payment of £3,000. So that's going to be £3,000. So £3,000 for prepayment of expenses. Accrual of income, again, it's in the notes of the accounts. It's income that was due for the year, which has not yet been received. So I go back to the notes of the accounts. Commission income owing at the end of the year, 30th December 2023, was £750. So that's going to be our accrual of income. So now we want to total those up now. We have total for current assets is going to be £70,150. Right, current liabilities. If we've got more than one current liability, they both go in the first column and the total goes in the middle column. Now, we've got trade payables. We've also got accrual of expenses. So the trade payables come straight from our trial balance. So trial balance, trade payables I'm looking for. And here it is, row 30, £9,700. Accrual of expenses, that's the expenses that were outstanding at the end of the year, which are going to be added on. So accrual of expenses, again, it's in the notes of the accounts. What was outstanding at the end of the year? There we are, wages owing of £3,000. So accrual of expenses is going to be £3,000. So now we combine them two together, we add them together, and it goes in the middle column. So that's our 9,700 plus the 3,000 to give us £12,700. So our current assets are 70,150 and our current liabilities are 12,700. So now we work out the net current assets. It's net current assets because the current assets are more than the current liabilities. If it was the other way around, it would be net current liabilities. So we've got net current assets. Now this figure goes in your third column. So your current assets are 70,150. You take away your current liabilities of 12,700 and you get £57,450. That's our net current assets. Now, we've got to add it on to the 41,848 now of our non-current assets. And that goes underneath the line there, so it's our total. So it's a 41,848 plus the 57,450 gives us 99,298. Now, if there was no non-current liabilities, that would be our net assets. But we do have non-current liabilities in this question because we have a loan. So we now need to know what the loan amount is, and that's deducted from the 99,298. So back to the trial balance. I'm looking for a loan. Found it. Loan of £85,000. And I'm going to deduct that, so let's make that negative in brackets. And for the net assets then, it is your 99,298, take away the 85,000, we get £14,298. Now, the last bit is the finance by bit, it's the capital section. So I have opening capital. Now, there's no additional capital introduced in this question, so we just have opening capital, we have the profit for the year, we get our total, we take away drawings. So opening capital is the capital figure in your trial balance. So back to the trial balance, look for capital, and I found it there. So capital is £41,000. Add profit for the year. The profit for the year you've just worked out in your income statement of 21298. Now, if it had been a loss, you'd be deducting it. So I'm going to add those two figures together now, and I get 62,298. I've got drawings. I've got a list of drawings. So I'm going to take away the drawings amount. The drawings amount in this question is purely what's on the trial balance. There's been no goods for unused calculations or adjustments, so it's purely what's in the trial balance. And drawings in the trial balance are £48,000. So now I'm going to have the £62,298, take away the £48,000 for drawings. That gives me £14,298, now, which is good because you need to compare that with your net assets figure. So I'll just highlight both of them. Now, both figures are the same, and that suggests that we've got our answer correct. It's not a guarantee, it's a suggest. It tells us more than likely than not we've got our question right in this exam situation. If those two figures were different, we would know that the question, or our answer to the question would be incorrect because the net assets and the total capital figure must be the same. Now, that's a very, very long question for sole traders on income statements and statements of financial positions. So there's a procedure you need to go through. Make sure you do the procedures. So I've got my trial balance, and when you first start doing these, you can write next to each category if it goes to an income statement or statement of financial position to help you out. Then I'm giving some notes. So once I've got the notes, I then do all the workings for their notes. Then I go on to do my income statement. And again, I only put down the categories where there's going to be figures. So I do not want any categories where there's going to be zeros, like we did when we first started doing these income statements, statements of positions. Now we're at the stage, if there's no amount for a certain category, we do not put it into our statement of financial position. Then we work our way through that. If I did any workings, I put the numbers down in that column there, and I get my profit for the year. Statement of financial position again. If there are categories which have got no figures, we do not put them down. We only put down the categories that are in our actual question, in the trial balance for our question. And then when we work out our net assets, we are wanting it to match our total capital at the end. If it does, as I said before, it suggests that we've got the question right for the exam purposes. Okay, so thank you very much for watching this video. I hope you enjoyed it and benefited from it. So thank you very much then. Take care. Bye-bye.